we are living through a reset at the highest macro, right? It's not like something that occurs, oh, we're resetting today. It's a process. It's a multi-year process. The whole world is restructuring. And at the same time, we're going through a fourth industrial revolution, AI, robotics, and automation, and very much the digitization of the entire monetary system. Right? So all of these assets are moving on chain. And in order for that to be successful or to sort of oil the cogs of adoption, well, you need certain pieces of infrastructure. So about 3 years ago, we had an investor approach us and say, hey, I want to see the creation of a New Zealand dollar stablecoin. That's where our company was originally set up, and that's where we lived. I moved to Bitcoin country, El Salvador, a couple of years ago, as an aside. And that was great. We went from like 0 to 60 million assets under management in a very short period of time because we were able to find a partner or a platform that allowed us to have pools to stake the New Zealand dollar against the US dollar on chain, provide liquidity. And the concept was very simple. It's like the more liquidity that there is, the larger the swaps can be. The larger the swaps can be, the more that there's protocol fees. The more that there's protocol fees, the more that there's APY. And the more that there's APY, new investors come in and it compresses it back down, right? And so we were quite happy focusing on being a stablecoin issuer. But then this particular platform that I won't name was hacked 3 times. And after the 3rd time, my team was in a position to kind of help lead the recovery effort. So we managed to recover, I think, 82% of all the different hacked pools funds through remote burning and reminting and coordinating with different issuers. So that gives us a pretty good understanding of the stablecoin industry. You know, my background is probably the first formal advisor and broker in the space. So I did the tokenomics for Chainlink and Bancor and Salt Lending, and I helped raise over $600 million between 35 clients in this space over the last 10 years.
Okay.
And so when I look at what's going on here, I'm like, well, the world needs a decentralized clearinghouse. We like to call it a next-gen AMM, or I just refer to it as a stablecoin and real-world assets swap and stake facility. It's the bedrock infrastructure, and then you can build structured income products and index products on top of that. We had one proposal, somebody wanted to combine like 5% wrapped Bitcoin, 5% gold, Swiss francs, and a basket of other fiat currencies, and create like a global macro hedge so that when you exit a trade, instead of just going back to USD, subject to inflation, you go into something that performs better than the Big Mac index, to retain your purchasing power. So that could be done just by having rebalance or automatic rebalancing. We're not going to create financial infrastructure, products. We're just going to create the bedrock infrastructure. And so because of how this was the genesis of Stabull Finance, out of the fires of a third party being hacked, we focus heavily on security. So 2023 was largely research and development. We wrote a couple of papers and a number of articles talking about, the growth of stablecoins and real world assets. And how they're about 2 years away, which is like right now. So we're pretty bang on to sort of see that coming into fruition. And we looked at everything from Curve to Aave to Uniswap, Sushi, etc. And we realized that these are designed for highly volatile assets to a large extent, and their bonding curves are not optimized for stable coins and real world assets. Now, I just want to spend 5 seconds defining real world assets because it's like NFTs. People call anything an NFT. People call anything an RWA. So OM and all of these other platforms, Plume Network, etc. They're not RWA. They're RWA infrastructure. Tokenized gold, lithium, cocoa, etc. That's a real world asset. Real estate, that's a real world asset. So they might be produced by a DApp or whatever that has a governance token or a utility token, but their token is an RWA. So for Stabull Finance, our path is super clean and super clear. We just integrate more chains and add more pools as the industry grows. We are a home for any issuer of legitimate stablecoins and real world assets. We can create a pool that people can stake into. And so your product can be available on our platform where you can swap it from one asset to another or add liquidity so you can dust off your asset and earn interest on your asset, right? Mm. It's that simple, and it all revolves around just simply being more capital efficient. So we ripped apart the entire concept of an automated market maker, AMM, and we rewrote it to have what's called dynamic sliding off-chain oracles that follow the price, so that it's just more capital efficient, right? Mm. And so theoretically, liquidity theory, capital efficiency wins. The more that, if you swap €1,000 to USD on a different platform and swap it on our platform, and we're giving you a 2-3% better execution rate, well, I mean, people are going to gravitate towards Stabull Finance for their needs. So we went through the formal 2023 kind of research and development initial build out. And then 2024, we largely focused on, an alpha and a beta. We attracted a good 65,000 users concurrently to in August, September for a beta to make sure that the platform doesn't break, right? Mm-hmm. And it was awesome because it didn't break with tens of thousands of users, and nobody really complained about anything in terms of UX, UI, etc. So there's always improvements to be made, and we're a scrappy startup, so we're just kind of going through the motions to launch carefully, because if we achieve our goal, we will be a top 10 DeFi protocol. Right. And we'll be doing billions a day in notional trade volume and all the rest. So we have to just very carefully make sure that we're building it in a way that doesn't break, can't be hacked, is safe, is intuitive, and it doesn't, tack on lotteries and NFTs and other stuff to confuse the audience. It's like, you go to Stabull for two things. You swap Swiss francs to Japanese yen, or golds to USDC, or whatever. Or you dust off your assets and you put them in a vault on Stabull to earn an interest rate by, providing liquidity. So it's very low TVL at the moment. It's the token generation events. It's a governance token, and quarterly users will be able to vote on which pool has how much APY. We can kind of direct protocol fees towards a pool. So if you're sitting on $100 million worth of USDT and USDC, it's worth your time to accumulate 1%, $1 million worth of the governance token to increase your voting power, to then stand a chance to increase next quarter's APY on the pool you prefer. And then it'll make up, 1% increase in APY will make up on your cost of purchasing voting power. So I've taken 35 advisory tokenomics designs that I've lived through in the last 12 years, and I've picked the best of my experience working on, all of these other big platforms to create a set of tokenomics that effectively works in the early adoption phase and when it scales really, really high. To really think about the game theory of how to create an equilibrium between the platform adoption and the value of the governance token and the dynamics therein. So the next step is we're live with a Korean exchange in terms of initial exchange offer, private exchange. Okay. That's 3 rounds of 5 days. That's the first public offer, so people can go and buy $100 worth or whatever of the Stabull governance token. And then at the end of the 20-day period, it lists on the exchange, and then we just cross lists to more exchanges from there. Should be a nice clean launch, and it's only a $3 million market cap to begin with.
So one of the things that we talked about earlier, the conversation was about Stablecoins and also some RWAs. It feels like from where I sit, I'm having more and more conversations about this, whether it's governments looking into Stablecoins or talking about possible regulation. Why are RWAs and Stablecoins taking up more of the conversation lately? Why are they so hot right now?
Well, I would argue at one end of the spectrum, and this would include the Ripple Finance court cases, who is going to be the winner globally to be the rails for interbank clearing and settlements? Is it going to be Ripple, or is it going to be some BlackRock created thing, or is it going to be a different private enterprise on a more transparent, consensus-driven blockchain? Can we run global finance on Bitcoin? Right, the most secure blockchain. Right now, the tooling simply isn't there, and so I think it's a giant battle of supremacy for global finance rails, and it's partitioned off into kind of bonds, bank to bank, interdealer brokers, and then just the trade fi, the world of like stocks should come on chain. And the reason for that is right now I go to a broker and I buy some stocks through interactive brokers or whatever. I don't ever hold the stock certificates in my custody. I have to trust them, which is fine. There's insurance and there's that and the other. But they don't even own the damn stocks in the first place. The DTCC has them.
Right.
Right. So that the entire like corrupt temple needs to be reimagined and come down and be reborn on crypto rails and as decentralized as possible. And so, for Stabull Finance, we want to decentralize it over 18 months where, if I get hit by a bus or the lead developer gets hit by a bus or whatever, the website doesn't go down because it's distributed through holochain or a different decentralized technology. We just want it to be absolutely permissionless. Anybody can use it and dead simple so that the users can vote on like the proceeds of the protocol revenues and the APY and the pools and all the rest. And so I'm going to the extreme of the decentralized end, but I'm obviously keeping an eye on the CBDCs, stablecoin regulation. But the trend is clear. Basically, we're moving trillions of dollars of assets and currencies from the old world into tokens that express them on chain. That's the directional bit.
When you talked about like the existing structures, like, and one of the big ones that comes to mind, is SWIFT and kind of that international transfer, but also CME, the Chicago Mercantile Exchange. Like, is Stabull Finance designed or built out to be an alternative to those systems, or is it built to plug into the? Yeah, is there any like operational, ability to plug into the existing system, or is it just a whole new way of doing things?
It's kind of funny you asked that because, like, 2023, I was sort of trying to find a soundbite to describe Stabull, and I was sort of referring to it as a alternative to, like an exchange, a centralized exchange. And then our lead investor came in, and they're a publicly listed company, and they're like, you realize if you succeed, you're actually competing with the CME and SWIFT network, right? Because what do? They're clearing and settlement and total finality of that through the legacy world. But now is this phenomena of trillions of dollars being expressed as tokens coming on chain, currencies and commodities. Well, they need to trade and clear somewhere, right? And they can happen on Binance or Bybit or whatever, or DeFi. And you've seen the growth rate and the charts of like total trade volume on centralized exchanges versus decentralized exchanges, and how decentralized exchanges are growing and growing and growing. Right? Just because there's less friction, and when there's less friction, there's more velocity of money. How much friction is there in the SWIFT network?
It's insane. It's insane. Like weeks.
It's out of control. It's out of control. Like we're at a point where, like, personally, I don't have any bank accounts left. I just can't deal with it anymore. We have to have some bank accounts for companies and all the rest, but the friction is just no bueno, especially when you have an alternative. Stable coins are becoming useful, integrated, etc. So I can pay all my contractors in stable coins, and I can manage treasuries. It's just there's no comparison. So that trend will continue, and all that Stabull is just being that core bedrock infrastructure to provide clearing and settlement first as a replacement to SWIFT or a parallel, and then as the RWAs. Like, where are the RWAs, right? Are you seeing billions of dollars of tokenized gold trading out there? Not quite yet. There's a few issuers who need to stop money, and their assets are circulating on Stellar, and they're slowly porting over to different, chains and stuff like that. But it's really probably 6 months from now that tokenized gold, real estate, non-securities, actual commodities will become traded, and you're going to see charts, and you're going to see data and metrics and all the rest, like in your usual dashboards.
Beyond that 6 month mark, then a year or 2 years, I know it gets harder to project what things look like, but what will be your role with Stabull at that time? Where's it going to look like?
Well, I think Stabull was hopefully just lists anything and everything that is legitimate, even if it's somebody wrapping a CBDC as an ERC20 that was proposed. We're not going to judge what the market decides is the winner in the future. What we are going to do is heavy analysis as we have to predict that we expect at least 20 trillion in market cap across stablecoins and RWAs by 2030. Right? And where are they going to trade and settle? Well, the current rails are okay. They're fine. There's some really cool tech out there, etc.
Mhm.
We just want to be more capital efficient and cleaner, smoother, simpler, etc. And so phase one is we talk to issuers directly and their LPs and market makers and say, hey, we want your product on our platform. And unlike Uniswap, we'll actually promote you. We'll tell the world your product exists and is available on this platform. That becomes a hell of a lot easier after TGE in about 4 weeks' time when you
Right.
can see the APY and claim it, and then it becomes real. But then we've simultaneously been talking to a range of neobanks saying, hey, if you plug into our router, you're already going Web3. So if you plug into our router, you can expand beyond just USDC and instantly offer your clients euros, New Zealand dollars, whatever we have, right?
Mhm.
And you can put a retail fee on top of that for swapping in and out. So we create a new product set and revenue stream for neobanks that just simply point and integrate to our router. And the user will never know it's Stabull Finance in the background.
Okay.
Sort of like a reverse integration.
Well, I've always been so interested in like things like RWAs. I was always hoping to see like tokenized real estate, all these ideas that could take away friction, but also like the payment system from Swift and international payments. It's so insane to see a global trade system that still uses finalization of payments that take a week or two to get done. It's just absolutely insane to me. And now, when we see this market, like we had the initial AI hype around NVIDIA's 2024 conference with kind of like the AI adjacent projects or, projects and chains that in theory could handle AI. Then we saw the secondary hype come in with AI agents. But then when I'm listening to you talk and I'm really thinking about the grand scheme of things and how all of this transfer of monetary data and the finalization of it's actually going to be handled, do you think that there's like a place for AI to come in and find its home within the world of payments and trade, in your opinion? Is there a use case that we could see come out of that?
Yeah, so AI agents are mind blowing, and people have exactly zero understanding of the disruption that's coming. Right
Mhm.
now, it's tinkering with like an AI agent that is a, I don't know, conspiracy bot or make me a song or, low level stuff. Once you
Mhm.
start to plug AI agents into the world of DeFi, you could replicate um, like a prop trading desk as a team of AI agents. You could offer insurance. You could automate a whole bunch of stuff. What I think is going to happen is that the wallet will become the AI agent. So instead of a MetaMask interface, you're going to get a ChatGPT prompt style interface to your wallet. Hey, what's my balance? Hey, find me the top 10 DeFi yields for stablecoins only.
Mhm.
Hey, draw me a technical analysis for 1 hour intraday trading opportunities, um, and display risk reward and stop loss and visualize it as a chart. Boom, right? I just saw it yesterday. It blew my mind of somebody building this. And so
Right.
for something like Stabull Finance, we would look to build an AI agent to rebalance the pools and to do arbitrage. So that's when there's, if somebody's just aggressively buying gold and there's not much liquidity on Stabull for gold, then the pool ratio decreases, and it needs to be rebalanced. Someone needs to sell gold in the other direction to rebalance the pool. An agent could do that, and it'll receive an oracle bonus. So uh, when that occurs, you're effectively being paid to trade. So instead of paying 25 basis points or whatever for the swap fee, when you're rebalancing a pool, you might receive 1% as an oracle bonus for rebalancing in the other direction. So AI agents, I think, have some very defined use cases right now, but the multi-trillion-dollar AI agents of the future in the next 15 years, I don't think people have even written down what that looks like. Like I had never seen a good attempt to articulate it.
Yeah,
And
it's
I'm just
tough.
looking at it going like, whoa, it's just going to be nuts.
How do you get people to understand something that they haven't even ever conceptualized? It's tough. We're doing the work out here, and I appreciate that. The last thing that everyone's going to want to know about, we save for the end as we get to the end here, is they're going to want to know about a token. You guys have got a public sale. You also mentioned that there was already exchanges and stuff lined up. What would be the final call to action for all of our listeners? How can they interact with that token?
You go to Probit Exchange, probit.com, Probit.com. You click on the menu and the IEO Launchpad option. You'll see Stable pop up, and then you can participate into the public sale from there. And so that will run until about the 18th or 23rd of next month. And then it flips to the first listing. And then we cross list 30 days after that onto more and more exchanges from there. And again, it's starting at a very low free mill market cap. We designed everything during the bear market, and we wanted to make sure that we don't have predatory VCs, that, like with public listed companies and non-predatory investors, and that even the public sale participants should do rather well by starting with an extremely low market cap.
He said Probit, everybody. It was on Probit if you're looking for it. And their website for Stabull is Stabull.finance, spelled just like it is in the top right corner. You can check it out yourself. Same name on X. You can follow them over there. You see it all on your screen right now. Fran, I appreciate you being here and having this conversation with me and Druth. This was a good talk. We covered a whole bunch of subjects. If you guys were out there watching and listening this whole time during the sponsored show with Stabull, you could have had a show like this. If you're a brand, you want representation like this, you should send us a message. I'd love to have a talk with Druth, and we'd put a panel together. We'll talk about whatever your subject is, whether it's DeFi like today or gaming or AI. It doesn't matter. We talk about all of it, and I'd love to do it with you. So send the account that's live a message right now, and the team behind the accounts, because it's not just Druth and me, will set that up. I appreciate them putting us together with Fran today, and I appreciate Druth carrying the weight today. My guy, killing it. I appreciate you so much, Druth.
I kind of had a lot of fun. I mean, we were able to really dig into some of the larger subject matter that's going out in crypto, the sentiment, and also the charts. I love covering the charts. I think that we're still just fine. I think the 4-year cycle's roughly still in place, but things are changing. This is what we wanted. Mass adoption. We got it. Now we're playing games with the biggest financial sectors on the planet. If we think we're going to out trade BlackRock by following the YOLO out in October, it's going to be the Pico top, and then we'll buy the bottom again. We're kind of fooling ourselves here. So really loved the conversation. Thank you for joining us on the show, Fran, and Pulse Digital. Everyone out there, I hope you enjoyed the show. It's Thursday, so I'm excited. Gonna have ballerina class with the daughters and enjoy the family, but really appreciate you coming on the show, Fran.
Thanks for having me. It's been a lot of fun. Really appreciate it.
Absolutely, guys. Everyone out there, stay safe, stay based, and stack sats, man. We're having fun here. So till next time, take care.